All right. Good morning, everyone. Good afternoon, everyone. Today is Thursday, February 21st, 2013. Let's see. I'll go right over the results from the live trading room this morning. The Russell 2000 plus 9 ticks, crude oil plus 23 ticks, gold plus 16 ticks, and natural gas plus 7 ticks. So we were up $550 a contract this morning in the live trading room. If you have not been to our live trading room, that means you haven't taken a trial with us. If you have not taken a trial with us, go to www.cfrn, like Nancy.net /apply. Sign up for the free trial. In the free trial, you get 5 days in our live trading room, 5 business days in our live trading room. You get access to all of our indicators, the trade setups that we go over in the live trading room. I mean, in the week, it's possible that you could learn enough to start making a profit in the live trading room. I wouldn't put that pressure on yourself, but it is possible. But you get 5 days with our indicators, our full indicator set. You get 5 days access to Dwayne and myself. Access, you'll see the weekly trading zones, all these sorts of things that we do in the live trading room. You'll be able to watch us put on and take off trades and talk about trades as they set up and discuss everything. All the training that you would normally get. All that is free. All you have to do is sign up for our free trial. It's www.cfrn.net /apply. Okay. Let's see. We currently, on the month, we're at plus $2,580 a contract. We had, since December 10th, we've had one down day happen this month. But let's not dwell on the down day. It was right here, this day, February 7th. We were minus $80 a contract. That said, I like to have a normal goal of, it stretches the normal expectations to have a goal of $4,000 per month per contract. In the 2 hours that I have in the live trading room when I'm trading 8 different markets and answering questions from 100 people. I don't know, a couple more good days and we'll hit it. But this month with the funeral and all the family things that I had going on, we ended up missing a couple of days, and it's February, so it's a couple days short to begin with. It's going to be a challenge to hit it. We need to make $1,420 over the next 5 business days, right? 1, 2, 3, 4, 5, yeah, $1,420 over the next 5 business days. That's a challenge. But we'll see how it goes. A couple more days like today and we'll be there. No worries. Let's start with crude oil. Okay. Today, as far as news events go, we had, there were a whole bunch of news events, but the ones that hit us during the actual market, we had, there were a bunch of those too. I could just go through all the news events, but I won't do that. The ones, we had crude inventories come out today, we had natural gas inventories come out today. Those made the markets jump around quite a bit. The markets were very volatile today, which was great for us. We love it when there's a lot of opportunity, and volatility provides opportunity for us.
2012.
Hey, there's David. In 2012. I guess we'll have to just...
Crude oil.
Crude oil? Go ahead. Never mind. I'll just mute David. There you go. Okay, David is muted. Remind me to take him off mute after, when it's his turn to talk. Let's see. I was going to do crude oil. All right, here's the crude. We started off the morning with... Let's scroll back. It took us, to get to our 2 points today, it took us 10 minutes in one trade. I believe, was it this trade? No, it wasn't this trade. It was a gold trade, I think. It took us 10 minutes in one trade to get to our 2-point target today. Okay, so we have reached our 2-point target every day except for that one day this month. Now, this was our first trade. The first one that set up was right in here. All right, I believe I started drawing these boxes in as I was telling everyone in the live trading room. All the partners in the live trading room. When I was trying to identify for them when to expect larger moves to happen. and how to actually see the larger moves. If you want to learn about that stuff, you need to come into, take the free trial, become a partner, get into the partners meetings, all that sort of stuff. But the first trade this morning that I was interested in taking was right in here somewhere. Let's go. We had a test. We didn't actually hit the BBC. There was an upper close right here. I didn't take this trade, clearly. Price dropped down through the MA1, crossed below the BBC, came back up, tested it, and gave a down close. Now, I'll bring my picture up. I'm not going to reference this picture a ton of times. I'm just going to say it's the same exact trade setup. We're using the same indicators, the same setup, the same time frame, everything for all the markets I'm going to go over. All right, here it is. Step 1 was the cross under. Step 2 was the pull away from the BBC. Step 3 is the pullback and test of the BBC with a down close. Step 4 is the bearish divergence. We had all those things. Okay, in this particular case, right here, we had all those things. I missed the trade, but the entry would have been right there. Okay, on the down close at 93.08. The next one that happened. Now let me minimize this picture, and I'll bring up the other picture, and I'm not going to go over this one a million times either. The next one that happened is the one that we did take. It had so much momentum on the way down here that it didn't pull all the way back up to test the BBC. What it did do is it gave us an opportunity to draw a trend line, and it gave a down close below the trend line, just like you see right here. All right, we still had bearish divergence down here. The cycle was still red. The only thing that didn't happen is it didn't hit the BBC. All right, we took the short there with the down close, and we actually took a whole bunch of ticks on that. The thing really took off on us. I had drawn in this box, and I said when it breaks down below the box, you can expect a big move down. And we got the big move down. As things turned around, okay, I'll answer your question in a minute there, Roger, and yours too. Excuse me. As things turned around, there was an opportunity here when we had a bullish cross up above the VBC, the MA1, which is the red and blue line, up above the BBC, which is the green line. Drew in a trend line. I didn't get into this trade. I didn't get into any of these trades right in here, as you can see. We had right here an opportunity to get long right there. There was another opportunity right over here to get long, using the same stuff over and over and over again. I had drawn in this box in here. I think what I was saying at the time is there was a shorting opportunity right in here, and if it broke down, you had a down close below this box, you should see it drop significantly. Okay? We didn't get that down close. As a matter of fact, it turned around and gave a long opportunity right up in here. Let's see, the trend line was down here like this. I don't know exactly how this happened. I think I got in right in there, and it moved up. I had put an order on there. This is where it was. The test of the BBC with the up close right here with the bullish divergence. Right in there is where I got long. I had completely forgotten that I put the order on. I went off and did something else, and I had completely forgotten that I put that order on. I looked over it. I looked over at my Crude DOM, and I saw that I was in a trade, and I was profitable in the trade, so I took some profit on it. All right. There was another opportunity to enter in here on the way up, and you can see it just happens over and over and over and over and over again. The same thing. All right. As it moved down, right over here, there was an opportunity to short. This would have been where you drew the trend line. The down close below that trend line right there was the spot to get short. You can see it went down about 6 ticks before it pulled back up, tested the BBC, and then it moved down some more. You had a bullish cross. I don't even know where we are in this. I had pretty much stopped watching it. Right in here at 11 o'clock is when the crude inventories came out, so I had stopped watching it for a few minutes in there. And then I started watching it again in here. All right, you can see you had the bullish cross, an attempt to pull back to the BBC, but it didn't get there, so you closed above the trend line. You have bullish divergence. You can get in there. You could have done it again here and again over here. It crossed all the way through the BBC. Now, there was no opportunity to go long in here, so you weren't looking to get long. It crossed through the BBC. The down close was right over here. An opportunity to get short in there. And then we get into our break. But there was a ton of opportunity on crude oil this morning. I know some of the guys in the live trading room did much better than me, and I had 23 ticks profit on it. And I know there were guys that did much better than that. All right, moving on to the Russell. Now, everybody that was in the live trading room this morning heard me say this 905.8 level a few times. There was 908.5 and 905.8. Okay, those were two levels in the Russell that I found to be important this morning. Now, the opportunities you can see on the way up right here, as it was approaching the BBC, the weekly trading zone, there was an opportunity right here to get long. And it went right up to the zone. I didn't get into that one. I didn't get into this one either. This was a secondary attempt at the zone right here. It did go up, hit the zone, pulled back down. So there was an opportunity to make about 6 or 8 ticks on this trade. Maybe 6 ticks. 9.3 up to 9.10, 7 ticks. It pulled back down and then it went through the zone, got choppy a little bit, and then it started to come back down. Everything started to come back down here. On the way down out of the weekly trading zone, I had identified this shorting opportunity right in here on the down close. Of course, I didn't take the trade, but I identified it. I did take the next one over here. Now, on this one, I had said look for it to get down to 8.5. And how did I define 8.5? Well, yeah, a bad day to go to work early. How did I determine 8.5? Well, you know what? I recorded it in the live trading room. Actually, I didn't record this portion. I recorded the first half an hour of the live trading room this morning. Anyway, I looked left, and I said I think it's going to go down to 8.5. It did go down to 8.5. Then it pulled back a little bit, and I said watch it get down to 5.8 was the next level. All right, and I shorted up there, and I took 9 ticks profit down here. I actually thought I had a target at 10, but it slipped me a tick. In the live trading room, I was saying when it gave another shorting opportunity right in here, it may go straight down there to 5.8. It may pull back up to the BBC and give you a shorting opportunity off of that. That's what it ended up doing. The first one gave about 6 or 8 ticks. Then it pulled back up, tested the BBC, gave a down close. I tried to short this one this morning, but I didn't get filled at 7.2. You can see we did get down to that 5.8. Everybody that was in the live trading room this morning saw me put this line on there in the live trading room, and you can see we did eventually get down there, and well through it. All right, that was the Russell this morning. We ended plus 9 ticks on the Russell. Gold. Let's look at gold. All the same stuff here. I think we had the total number of trades today. I think we took was 7. I believe I wrote it down over here. I typed it in. Yeah, we took 7 trades and we made $550 a contract. Would I like to do it all in one trade? Why, yes, indeed, I would. But we didn't. And you know what? That's okay with me too. Again, the boxes in here were areas where I thought the market would be explosive once it got out of those areas. In here, we took a long trade here. This was our first trade on. This was our first trade on gold, and this is where we got our 2 points in the first 10 minutes right here. We went long on the gold right here on the up close above that trend line, and we took 2 points profit right there. We went long gold again right here, and once we closed up here, up above the MA1, I moved the stop to break even. It came back and got us out at break even. I had drawn in trend lines in here and everything. There was no opportunity to short in here until right over here, the break down below the trend line, the close down below the trend line. I was looking for a down close outside this box. We didn't get the down close outside the box. This down close right here, the trade right here, that is right in there. I can highlight it for you. On this bar right there, that gave about 5 ticks profit. It did close below the MA1 where I would have had my stop at break even had I taken the trade. And when it broke out of the box, it was explosive. We didn't have an opportunity to get long in here, but I was explaining to everybody in the live trading room that this is why I don't have a target on gold. Because if you got long, like let's say you had divergence here, you would have had a setup right here. You would have been going long right here. If you would have gotten long there with divergence, there's $500 and something a contract right there in that one quick move. And the thing would have just flown right off your DOM, and you wouldn't have even noticed it. You wouldn't have noticed it. You wouldn't have been able to catch up with it. Is what I mean. It started to consolidate in here. Now, right in here, I think the Philly Fed came out. The Philly Fed Manufacturing Index came out, and it was way off. But I think that's also one of the ones that can be bought early, so people can get a look at it ahead of time. You know, they're expecting +1 and it came out with -12 or something like that. It was just way off. Anyway, I think that's what caused this big decline right here. All right, this big move down. I didn't put any trades on in here because it was just happening way too fast. And you know, you can see that it went up and there was an opportunity to get long right here off the BBC with the blue cycle. There was another opportunity. You would want to have a higher swing. You would want an up close above the trend line, so it would be right in here. Was another opportunity to get long. Nothing in here. Nothing in here. Nothing in here. You would be drawing your trend lines up at this point. So nothing in there. You're drawing your trend lines down at this point. Nothing in there. Nothing in there. Nothing in there. Nothing in here. So there was just nothing in there for about 10 minutes. We didn't do anything. We pretty much stopped looking at it and let those 10 minutes go by and traded something else, I believe. I think we got into natural gas at that point. Over here there was another opportunity to get short right in here. I don't know if that went 8 ticks back, but every trade we place has 8 ticks risk on it. Okay? So, you know, when you look at a market, you know from where the entry was, I had 8 ticks risk on it, no matter what it is. I just wanted to point something out with the Russell over here, for those of you guys who were still looking at that. This is your trend line. Okay. The green's almost down into the cycle. So, just wanted to point that out for all the partners who are still looking at that. Let's see, the next gold trade that I took was over here. Okay, we had the bullish cross suggesting we would have upward movement, and we did get the upward movement. I got long in here. I took profit up here. There was another opportunity right in here on the up close above that trend line, which was right there. It turned around, started to head down. Right in there, there was an opportunity to short. Over here was another opportunity to short. Actually, right here was another one too. It looks like that one would have stopped out if you would have shorted right there. Now you would have made it right back on that one. And that's pretty much it. That was gold. There was a ton of opportunity on gold this morning. All right, a ton of opportunity on gold, on crude oil, on the Russell. As a matter of fact, all the markets had a ton of opportunity this morning. That Russell entry that I just showed, the down close below the trend line. All right, it's still going down. I'd have the risk off the trade at this point. Just hold on for the ride. Soybeans. We took a couple of trades in the beans this morning. We got break even on both of them, but we went long here on the beans. I had a messed up entry on that one. I missed my entry by 2 ticks, and I entered incorrectly by 2 ticks, and I ended up taking a break even on the trade. But you can see that that did go up the way that we anticipated it would. Our next entry was over here. We got long on this up close, and it went up 5 or 6 ticks. We moved our stop up to break even, and then it came back and took us out. And that was pretty much it. That Russell trade, if you moved your stop to break even, look for, hang on, let me just bring this back. You got to look a long way back. That 5.8 level that I had shown you was significant, and we got down below it. So if you got into that, you know, you should actually be locking in some profit here. Let's see, and that was it on the soybeans. All right, we didn't end up. We got 2 trades there. We got 2 fills. We got 2 break evens. Both of those trades, we had some profit in. You know, I hadn't really thought about it until I was doing a meeting last night with one of the partners. You know, I take a lot of break even trades, but almost every break even trade that I take, that means that the price went 4 ticks in favor of the trade. So you guys think about that. Anybody that's been here for a while and knows how many break-even trades I've taken. You know, like today, for instance, I took 7 trades in all. I think 7 trades total. And I think I had 1, 2, 3. I didn't have any losing trades. I had 3 or 4 trades that were winning of various amounts. So that means I had either 3 or 4 other trades that went at least 4 ticks. Okay. The entries and exits are exact. Well, the entry is exact. The exit is based on price action, so the exit varies, but the entry is precise. It's exact. The question was, how much guidance is there for entries and exits? Okay. Like looking at something like over here on the NQ right now, for instance, I would draw a trend line like this, and I would say the cycle is red. We have bearish divergence. If it tests the BBC and gives a down close, you can short that as long as the cycle stays red. If it doesn't make it up to the BBC and you get a down close below the trend line, then you can also take that. All right. It would be up to you to watch the bar and see where the down close happens. If I were trading it, if I were putting the trade on, I would have my eye on it and I would tell you exactly where it is. But, with all the markets that are going, I may say that and tell you what to look for. Like right now, it's hit the BBC. The cycle is still red, but the close of this bar, that cycle is going to be blue. So you're going to need a down close below this trend line. All right, a down close below that trend line. So now you know what to look for. Okay, if you're trading the NQ. The ES had some. Well, we can look at the NQ. The NQ had a bunch of opportunity today too. I didn't take a single trade on the NQ, so I'll just go through a few of them with you. The NQ bounced around a lot, and there was a lot of opportunity. Look at this huge head right here, shoulder, broken neck, right there, and down it went. But let me just point out some here on the NQ for you. Okay, now when you have, let's scroll back. I'm not cherry picking anything in here. I'm just trying to start at the beginning. All right. 9:30, you had a bearish cross, tested the BBC with a down close. So right here would have been an entry. All right, for the short, moves down, pulls back up right here. You're drawing a trend line at this point, and you're looking for a down close below the trend line with bearish divergence. The black line gets up above the green line, so you don't really get it. It did go down a little bit. If you did get short there anyway, it did go down a little bit, probably about a point or two. Then it changed directions on you. Once it changed directions, you are looking for a test of the BBC with an up close while the cycle is still blue and you have divergence, or you're looking for a close above the trend line. The trend line here is pretty ugly. It's like it's topping out right here. All right, that's your trend line. So you never got the close above the trend line. It turns down. All right, the whole thing turned down, and now it turned down so fast that the cycle had to catch up down here. All right, so it finally did sort of catch up right here. There was a little bit of divergence on this pullback right here while it built that bar. So the down close right there is one spot. Pulled back up here, I drew the trend line in. You need to close below the trend line for that move. All right. It got a little bit choppy in here, but there were no trade signals in here. All right. There was not a single trade signal until right here, actually. Looks like, no, wait, if we draw the trend line, let's draw the trend line from the bottom. There's the trend line from the bottom. So there was no trade signal in here. The next one was here, then here. Then it was really choppy and divergence was backwards. We're trading on the wrong side. So there were no signals in there where it got really choppy. All right, there was a short one right here. Flipped around and moved up, but there were no signals in here on the long side. Yeah, still no signals in here on the long side. Nothing here on the short side. Right here there was kind of a signal, but the green's almost into the cycle, so there's not much there. There was one right here, one over here, and then we get into where we are now. Okay, right now we have bearish divergence. This is the trend line. We need a down close below that trend line. All right, simple as that. The Russell trade that I mentioned earlier, this was the entry over here at 902.4. When I say take the risk off, I mean move your stop to break even. If your stop was at break even, you're still sitting in that trade pretty well right now, plus 7 or 8 ticks. All right. I do this slower when I'm not doing a recap. Just FYI. I try to do it slower anyway. If people ask me to do it slower, I do. I should say that. All right, let's look at the ES this morning because there were a bunch of trades on the ES. I didn't put a single one on, but there were a bunch of them. All right, here we had our bearish cross that tested the BBC and a down close below the trend line. All right, so right in here was an opportunity to short the ES. I know some of you guys did short it there, and there was a second opportunity in here for you to short it, and I know some of you shorted it there. There was an opportunity to get long in here. I know some of you did that. All of those worked so far. There was an opportunity to get long right here. This one would have stopped you out. Okay, it only went a tick or two in favor of it, and it would have stopped you out minus 2 points. But at this point, you're up, a good deal from this one. A couple of points from that one, a couple of points more from that one. So giving a couple back right here and then getting it right back right here. And that was the end of the ES this morning. Okay, the ES was definitely tradable this morning, which is good. All we need is volatility. As long as we have that volatility, then you can trade the thing. Normally it doesn't have that much volatility. All right, the down close right here with the bearish divergence was a spot to enter. Right there. All right. Let's see. Natural gas. Now we took one trade on natural gas this morning. Where the heck was that thing? I think we took it before all that. Yeah, we did right here. All right. Natural gas has started to move up. There was an opportunity right in here. We didn't get filled on it. Okay. Again, it's the same indicator set. You're looking at the same exact trade setup on all of these. Okay. On all of these. That area was the weekly line, so that was resistance. That area up here is the weekly trading zone. So that would have acted as resistance right there, Roger. Okay. We're doing the same exact thing, the same time frame. It's a 4-tick range chart. It's a range chart, not a tick chart. It's a range chart. Same time frame on every single market. Every bar is the same size on every single market. The indicators are the same on every single market. The trade setups are the same on every single market. Okay? It can't get much simpler than that. So here was natural gas. We had a close above the trend line right here. We got long on the close above the trend line, and I looked. The high of the day was right here, and I put my profit target one tick below the high of the day, and it filled me at my profit target. It went back up, put it in double top at the high of the day, and it reacted off of that. The natural gas inventories came out at 10:30. You can see how it had reacted prior to the actual inventory coming out, and then all this craziness right here that you see was all within 1 minute. Every single one of those bars was all within a minute. Okay, then finally that minute finished, and it was just crazy in there. Okay, it was just crazy. So we let it go and we didn't do anything. Were there more opportunities? Why, yes, of course there were. Shorting there, and there, and there, and there. Those were all shorting opportunities. All right. What it's doing right now, there's the trend line. Bearish divergence. So the places where you would have gotten short would have been right there on the down close of that bar, on the down close of that bar, on the down close of that bar, on the down close of that bar. All right. That was natural gas this morning. We looked at the euro a little bit. I had drawn in this area right here, and I said I think when it breaks out of that area, I have no idea which direction it's going to go in, but it should be a pretty good move, and it was a good move up when it finally broke out of that area. We didn't place any euro trades this morning. Okay, so I think that covers it. I've covered all the markets. I've covered how to get the free trial. I've covered everything else. This is the Russell trade. Again, I said right over here at the beginning, 902.4. It's now down to 901.3. So if you listen during the recap, you're up $100 now, $100 a contract. All right, for everybody that's on the fence, if you want to become a partner, you should have, everybody that was in the free trial yesterday should have something in their inbox telling them how to become a partner. If you don't know how to become a partner and you want to find out how to become a partner or a member with CFRN, so you can get into our live trading room, get the 3 months of mentoring, get the weekly trading zones, get the swing trades, get access to our members area where we have over 100 hours of videos. Actually, we have over 200 hours of videos, I think. Of course, you don't have to watch them all, but some people say you should. But get into our members area, get into our weekly partners meetings, which, by the way, we're not having tonight. Send us an email, support@cfrn.net. Just put partner info in the subject, and we'll send off all the information you need to become a partner. Okay. Let's see, what is the other thing? The iPad mini, because next week is our 100th, actually tonight would be, but we're putting it off until next week, our 100th weekly workshop meeting. We're going to give away an iPad mini to one of our active partners. All right. If you're out there listening and you're not an active partner, but you are a partner, you need to be an active partner. Okay? If you don't know what it takes, send us an email, support@cfrn.net. We'll tell you what it takes to get activated. Okay? If you're not a partner at all, then you need to become a partner. And if you become a partner between now and then, you'll be in the list of people that are eligible for that drawing. Okay? That is it. We're going to wrap up the recap right here. All right.
Alrighty, very good.